So far, we've talked a lot about finding stocks to trade and low risk entry points to enter a trade. Let's talk about position management, which means when do you exit your trade that you're in? When do you sell a stock that you've bought? And when do you buy to cover a stock that you have sold short? So consider these trades. This is a 1 day chart of Merck. Okay, it's not listed or labeled as such, but this is 1 day. So in the morning, you see Merck going up, and you buy it at $63.60 a share. Then it goes up 12 cents, and it comes back down a little bit below where you bought it, and it's bouncing around up and down. This is lunchtime; it's pretty slow. So what do? Well, here's what I would have done. I am not looking to make a 12-cent profit when I get into a trade. I am not going to feel bad that I didn't sell it here if it comes back down here. Now, I would have given this a 10-cent stop. So I'm in at 60. I'm out at 50 if it goes down. That gives it enough room for this trade. So it's bouncing around, but it doesn't go up and it doesn't really go down and stop me out. It's just kind of wiggling around, not doing a whole lot. This is the trade that I am looking for right here. A 40-cent move or bigger from 63.60 to over $64 a share, almost a 50-cent move there. So what I'm looking to do is buy it, catch it as it moves up, and then when it starts to steadily trend down, that's when I'm out. So I'd probably get out right about there. Let's call it 63.95 if I'm in at 63.60. So if I could make 35 cents on this trade, I would have caught the majority of the move, and that's what you're looking for. Anytime you're catching 60 to 70% of the move intraday, you're doing great, okay? So this was a 40, almost a 50-cent move. So if I caught 25 to 35 cents out of it, that's great. That's fine. You're never going to catch the exact bottom or the exact top. Don't feel bad that you didn't do it, okay? So I'm not exiting because I didn't get stopped out, and I'm not selling for a few cents profit. I'm looking to either get stopped out at 63.50 or to catch a winner and then get out when it stops, when the momentum stops and it starts to come back down. Okay. Consider this trade. So we see Abbott Labs go up during the morning. It's at lunchtime and it's going sideways. And, excuse me, we think it's going to go up again. So we buy it right here at $44.55. And once again, it goes up a little, it goes down a little, nothing too big happening. Then it goes up here, comes back down, and it closes at $44.64 per share at the end of the day. And we have to get out at that price. So my stop would have been, let's just say it was 1 nickel, 5 cents. And I would have hoped to make 15 cents. So that would be 3-to-1 reward versus risk. Well, even though I didn't do that, I still gave it room to work and plenty of time to work as well. That's what you want to do. You want to give your trades plenty of time to work to catch the bigger move. You want to give the trade plenty of room to work. You don't get out for a small gain or a small loss. You had a good reason to enter the trade. Stay in it until you catch a big move or you get stopped out. That's what you want to do. Because again, if your reward is 2, 3, 4 times what you're risking, that's the proper strategy. And if you're picking high odds trades where you're right at least 50% of the time, then you're doing good. Okay? And you'll make money with that, with those numbers, those statistics. So basically, you want 3 results when you enter a trade. Number 1, you want a win. Of course, we always want to win, but this is the one we're shooting for. And you're going to exit when the stock turns around. Momentum ends, it starts to trend back. The strong move is over, you get out. Okay. So back again on this trade. It's coming back down steadily. I'd be out right there because it's showing me the up move is over. So I'm out. Maybe even right there, somewhere in here. You want to give your trade plenty of time and room to work. You don't exit just because it doesn't immediately go in the direction you want. If you start getting out with a small gain or a small loss, what you'll find happen is that you miss those big gains that you were trying to get because you were impatient or you settled for a small gain. You want to have that big gain or get stopped out at your predetermined stop. And once in a while, especially going into lunch, if trading is really slow, my stock is just sitting there, or sometimes if I find a stock that I really want to trade and I don't have buying power unless I exit my position, if that happens, then I'll exit if it's really slow. Otherwise, I'll stay in. I'll stay in the trade and give it plenty of time to work. You want to do that so you can catch those big moves that you were shooting for when you entered the trade. Okay, go ahead and take the quiz now. And when you're ready, move on to the next lesson.